friends, I'm back. Happy New Year. Happy 2025. Today is Monday. I have a little bit of a case of the Mondays, and so I want to share with you today 3 strategies that I am employing in my dividend stock portfolio to better my life right now in early 2025 and beyond. This is going to resonate with a lot of dividend investors out there because we do what we do oftentimes for the same reason. We want to unlock that dream life where there's not so much stress. There's not such a schedule of work, if you will, because today's Monday. It's the first day back after the holidays. Of course, I was working on and off over the holidays, actually quite a bit, but today it's real. Holidays are over. We took down the Christmas tree, the decorations yesterday. It is back kind of into it. Right now, the schedule, the work schedule, the family schedule, the schedule of life. And that's a little daunting. It's a little bit demotivating, if you will. I could use a vacation right now. I would love to go on an airplane and travel somewhere tropical right now, or just hop on an airplane and go somewhere like Arizona right now because the weather there is really sunny and nice. It's kind of pool weather. I could use a vacation from the holiday vacation. Put in the comments below if you feel that way. And that's why I do what I do. I'm a dividend investor because one day those opportunities will be available to me and I can see the light at the end of the tunnel. Those days are not so far away anymore, but I have more of a journey to accomplish. And I'm going to share with you the strategies in the video today of how I'm overcoming some of this kind of case of the Mondays and some of this kind of case of a little bit of not so excited to get back in the middle of things. And as you can see on the screen in front of you, one of the challenges, I list a lot of stuff here. I already covered some of it, but the first one is holiday break. There's no real holiday break because the work just keeps accumulating while we're gone. And so a lot of us kind of front loaded it. We worked extra before the holidays and, hopefully got a lot of stuff done so that it didn't accumulate too bad when we were gone. But now that we're back, it's inevitable. The work has piled up. It's a little bit overwhelming. The work does not magically disappear. It does not go away. It can be overwhelming. We invest in dividends for a reason. We want more flexibility in life. We don't have to worry about such stresses, but so be it. That is the situation that we're in. That is the journey. And that is what I will eventually overcome with the full financial freedom from dividends. And so I have 3 strategies, though, that have kind of flipped my mentality from being a little bit unexcited about the new year to being super excited about the new year. And here's how I'm doing it. So strategy number 1, as you can see on the screen right now, this one is I'm starting the year just with massive cash flow. This was kind of by accident that this happened, but it really works out well for me. I have a major Altria dividend coming in this Friday. Right now, their current yield is about 7.8% starting yield at the current share price. I have a major Philip Morris dividend coming through next Monday, a week from today, and starting yield is 4.46%. For those that are buying at the current share prices, I've been buying these for many years and have a lower cost basis, so my yield on cost is higher than these numbers. British American BTI is paying a dividend, a massive dividend, about a month from today. And so I'm excited about these dividends rolling in because there is nothing like some huge cash flow coming in that can remotivate me towards the goals in my financial journey, my dividend journey, my life journey. And so I started thinking about all of this and I had an idea, kind of a strategy popped into my mind. And it's not about buying more Altria, BTI, or Philip Morris because I have way too much, honestly, allocated to them as it is, but that's by design. I did it on purpose because they pay such high dividends, but I'm diversifying away from those right now. But the idea, as you can see on the screen in front of you, the strategy, if you will, is, hey, Ian, back in the day, you didn't really care when dividends were paid. They're paid, you kind of smooth out the income over time, and it all kind of works out. But now, as you get closer to FIRE, financial independence, retire early, you're kind of seeing the dividends come in, you're using some of them. It really matters when they're paid. And I started thinking, hey, why don't I identify those dividend stocks that are paying dividends in January? other than the ones just mentioned, and invest more in them, especially if they're on sale. Of course, probably only if they're on sale. And so I started looking at some stocks, and one of them, of course, we all know this, Realty Income. It's on my buy list. I'll link to that in the pinned comment below. I shared this in my last video, but it's I have the stocks I'm targeting to buy in 2025 in that last video, but it's a 6% starting yield. It's a distribution yield, non-qualified since it's a REIT, but they're paying monthly, and the first one of 2025 will get paid out on 1/15. But here are two that I don't really think about all the time because I don't really look at the dividends. I'm actually reinvesting for these ones. But PepsiCo, it paid today. I didn't even know until I started researching for this video. But this one is also on my 2025 buy list, and it's a 3.7% starting yield. That's pretty meaningful for PepsiCo. Kimberly-Clark, one I haven't bought for a long time. It paid on 1/3. So last Friday it paid. I didn't even know. I wasn't even looking at this because I'm reinvesting this one back into Kimberly-Clark. So it's auto reinvesting back into the same stock, but it's a 3.87% starting dividend yield. Kimberly-Clark isn't really on my buy list for 2025, but it's nice here just to take note. Being kind of a core kind of stock for me, Kimberly-Clark, I wouldn't mind adding a little bit more to it, especially knowing now that it pays early January. PepsiCo, boy, no brainer. It's paying early January. This one is amazing. And so by adding right now to these stocks that pay early in the year, of course, Altria, Philip Morris, BTI, not in the cards for me now because I already have too much, but the other ones, this sets me up for success in the future. It sets me up for success because we all know the holidays, they are really expensive. And part of the stress in January, it's not only going back to work, but it's kind of thinking for a lot of people, how do I kind of get back on a good financial footing? For others, it's just kind of like, boy, I already spent all the money I had to spend, and now I'm kind of starting back over. Isn't it nice in January to have massive cash flow, more cash flow perhaps than in other months? It's nice just to see it in January. It's more meaningful because it's a time of year where we're starting a new journey. It's a new year. It's a new financial journey each year. And so I just thought of that and I was encouraged by that. So if you're a dividend investor at home, don't get too down. Think about those massive dividends that are rolling in. So that's strategy one, solution one, kind of to the 2025 back to work woes. But I have another strategy I want to share with you on the screen right now. So check it out on the screen in front of you. This is another one. And it's really how I am achieving my strategic goals in 2025 really quickly. And the reason I'm able to achieve them or start achieving them instantly is because of Altria, Philip Morris, and BTI, those massive dividends. But you may recall from some of my other videos, one of my goals is just cash buffer. I just talked about this, but Q1, it can be a time of year where cash is depleted. For me and for many people out there, holidays are expensive. I am just using some of the dividends from Altria, BTI in particular, not PM as much, but I'm using those to rebuild cash reserves. I like that. I like that right off the bat, kind of getting back on really good, solid footing after the holidays. Also, though, I am selectively reinvesting into SCHD. My primary investing goal for this year is really building up SCHD in my portfolio. And so I'm going to be able to hopefully buy around $27.27 where it is right now. And that's a 3.6% starting yield. And so the big dividends coming in early help me replenish cash, build a cash buffer for the rest of the year, and invest in the ETF, SCHD, that is my number one priority for this year, financially speaking. How do I accomplish this, logistically speaking? Some of you may remember, I actually segment my investments across different accounts. And it just so happens with Altria and BTI, I have positions in two different accounts. I look at one of the accounts as the one where I always take the dividends from to spend or to build cash reserves, sometimes selectively reinvest. The other account, I'm always reinvesting there, generally speaking, selectively, and this time selectively into SCHD. So that's strategy two. It's really a byproduct of strategy one, but because of the massive dividends that are coming through, I can go and accomplish some financial goals for 2025 early on. But I have another strategy, as you can see on the screen in front of you right now. The third strategy that I'm using right now to kind of combat the woes of going into 2025 after the holiday season is just taking some small steps in the right direction. I've talked about this over the years, but I truly believe momentum builds, and we see it. We see it in the dividend snowball. Here's an example. I just bought some Chevron. My patrons already know this. I'll link to my Patreon in the pinned comment below. But as you can see on the screen in front of you right now, I bought some Chevron last Friday. And this was an exciting one because it seems to be rising in share price again. But thankfully, I got some at $148.18. So it's still in the 140s. I really don't want to be buying this in the 150s, certainly not the 160s. So I was excited to get some in the 140s. And it has a starting yield of 4.4%. And they're growing the dividend on average by 6.5% per year. Look, it wasn't the biggest trade ever, but it was my first trade of the year. It was a step in the right direction. It was a line in the sand. It was building some momentum for me. And so I love that. But let's talk about just life as well. As you can see on the screen, and this has probably been evident a little bit in the video today, but I'm recovering from a cold. I'm pretty much better, but I still have a cough, and I don't have as much energy. Anyway, life in general. So I went to the gym today. I was really challenged. I was probably working out at maybe half capacity. I feel so much better having gone to the gym. It was the first workout, really serious workout for me this year after the cold. And again, it wasn't much, but it was something, and it will only build from here. It all starts with a step in the right direction. As you can see on the screen in front of you right now, I want to also just share easy tasks. I'm finding it a little difficult to focus on big projects today at work. So I'm starting with the easy stuff. I'm just doing calendaring different appointments and meetings. I'm answering some simple emails. The momentum, it will only keep building. And so if you're sitting there at home, you're watching this video, or you're on your phone, you're watching it, one, please don't forget to click the like button. It really means the world to me, truly. But also, don't forget that even if you're feeling a little bit demotivated right now, starting the new year after all of the excitement of the holidays, it's okay. We are all really in the same boat. We are, many of us at least, I imagine. Put in the comments below if you're feeling this way, but I imagine a lot of us are feeling just how I am, and we can kind of break into it. We can get on with all of our goals this year, just taking steps, small steps in the right direction, brick by brick by brick. I have a bonus strategy today as well, as you can see on the screen. So this is number 4, bonus. I want to share with all of you, just draw strength from the community. This is one of my top goals with PPCE in this year, is both virtual meetups and in-person meetups. Let's just enjoy the community, motivate each other. I'm going to have a corner Patreon meetup soon. Corner patrons, stay tuned. I'm going to schedule that soon. In-person meetups. Reach out to me on Instagram if you're in the Bay Area, LA, or Idaho, Treasure Valley, Idaho. Those are some areas that I tend to be, certainly in Idaho a lot. That's where I live. Reach out to me, and let's see if maybe we could meet up this year in 2025. I'm trying to schedule a few in-person meetups this year. Read great books. Those can kind of give a ton of motivation around these types of times, and consume great quality content like this video. But please do avoid mindless scrolling. I've found myself falling into that trap. It's so easy to do, but so damaging. And speaking of that, there's good social media, there's bad social media. Bad social media is just the mindless scrolling. I'm trying to really avoid that this year. Good social media is engaging with community, building each other up, challenging each other towards our goals. And with that, I want to share with all of you, it's in the pinned comment below. It's my affiliate link. In terms of full disclosure, I am a Blossom social affiliate. I'm compensated if you use my link to sign up for Blossom. but the platform is free. They have a premium platform you can pay for, but the basic platform, it is free and it's awesome. As you can see on the screen, this is Blossom Social. I've connected already with like 7,000 investors there. And this was created by Brandon Beavis, my friend and YouTuber. It is a community of investors. It's social media basically just for investors, and it is amazing. It's encouraging. There's great conversation. It's motivating. There's no mindless scrolling. It is a great place to be, a great place to be motivated for 2025. So again, check out the pinned comment if you want to sign up. And if you use my affiliate link, I will be forever grateful and I'm compensated. But again, the platform is free. All right, everyone. In conclusion, it's not always going to be this way. Why do we invest for dividends? We invest for dividends because one day we'll have control over all of our time. It won't matter whether it's the holiday break, whether it's the new year. We can make every week a vacation if we want. Although I do think it's important to stay really busy, really active, have some kind of schedule. I think that's really important. But this is why we do what we do. And so 2025, it's going to be another great year, a journey towards excellence in achieving those massive dividends. Before I go today, please don't forget to subscribe to my channel. And also I want to share my full disclosure. I am long the positions mentioned today. In terms of full disclosure, I am long Philip Morris, ticker PM, Altria, ticker MO, British American, ticker BTI. I am long Realty Income, ticker O. I am long PepsiCo, ticker PEP, Kimberly-Clark, ticker KMB. I haven't talked about that one for a while. I'm long Chevron, ticker CVX. I am also long SCHD. I own those positions in my personal dividend stock portfolio. Before I go today, in terms of a friendly disclaimer, I am not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Before you invest, please consult your licensed investment advisor first. I'm just sharing my journey here for fun and entertainment. As always, I have the full disclosures, disclaimers, additional language in the description below. I love you all. Thank you for watching the video, and I will see you in the comments section below, and I'll see you in the next dividend stock investing video.